Okay, so now I want to talk a little bit about spreadsheets versus forecasting software for getting your financial forecast up and running. And I'm going to talk more about this later, but I wanted to hit it now because it's important to be thinking a little bit about this, especially as we go in our example that we're going to do in the next module, where we're going to look at a financial model for a financial forecast that's using a spreadsheet. But spreadsheets definitely have some benefits in that they can be really easy to get started. Doesn't cost much of anything really to get going. The downside is that they're pretty loose and free, and unless you're a power user and really understand financial modeling, it can be a challenge. Forecasting software, on the other hand, is built for forecast. It's got the model all built in, the ability to look at historicals, graph, do some other reporting that can be very helpful. So what I want to do is I just want to touch on this before we go into our example. I want to touch on some of the differences and the benefits and weaknesses of each one of these. So with the homegrown spreadsheet, it's easy to get started quickly. It's especially easy if you're proficient with spreadsheets. The customization of the drivers, the assumptions, the look and feel, you can basically set it up the way you want, because even though you can start with a template, and I'll have templates for you to download from the example that we're going to go through, still, you pretty much have to go in there and really just kind of customize it for your particular business. There's no new software to install or learn because everybody's got it. There's really no reliance on an outside vendor, and it's super inexpensive to get started. Okay, the downsides though is that the underlying financial model has to be created. So, and if you download the example we're going to look at, some of that logic is built in, but you're going to have to make a number of changes and tweaks in there to make the P&L and balance sheet fit how you're setting yours up. And so there's going to be some work involved in making sure the financial model stays together. You have to create a robust reporting capability because it's not just built in. There's manual entry of data in many cases. The forecast periods have to be regularly added to the model in the homegrown spreadsheet scenario. And it can definitely become clunky and difficult to maintain over time just because you're adding periods and adding data. And that's when the complexity really starts to go up as you add periods. And then it's very prone to human error. So you got to be really, really, really aware of the ease in which you can make mistakes and create a bust in your model when you're creating a homegrown spreadsheet. And so I'm going to put in the category of homegrown, I'm just saying you're pulling up almost a blank slate, or you're pulling up the example from the construction example we're going to look at. Either way, I'm referring to that, generally speaking, as a homegrown spreadsheet approach. So we'll contrast that with forecasting software. And that's software that sometimes is made to look a whole lot like Excel. In some cases, it starts from Excel, but it's putting a big wrapper around that so that it's creating the model for you. So some of the benefits of forecasting software is that it handles the underlying complexity of the financial model. It's already got the reporting capabilities in there for both historical and forecast periods. It's built on a database, which is very, very important. So it's designed to be able to accumulate the data that you're going to add to it as each month goes by. It has the ability to do multi-entity consolidations, which is important. Adds a lot of complexity if you got multiple entities that you have to consolidate. Makes it real easy to import data electronically, and then it just in general promotes a more repeatable forecasting process, because when you got a model there, you can import the actuals when it's done, or when the actual financials come out. Makes it a whole lot easier to see what's going on and to consider what kind of changes in the forecast software you're going to make. The downsides, though, is that the software has to be purchased, and in some cases it's expensive. Not all cases. There's a number of different tools out there that are not that expensive. Oftentimes it requires professional assistance to implement. It takes longer to get your forecast up and running because you got to get the software, you got to make the decision about what's the software that's right for you in your circumstances. And then there's a time and cost when there's customization required. I personally, I use spreadsheets sparingly in forecasting. I use a tool called Survivalware. It's worked for me for the last 12, 13 years. But generally, when I bring a company up on Survivalware, there's some kind of customization. So there's no doubt that it takes a little longer to get going because we have to do a good bit of work on the front end to make sure that it's the right tool for the job. But when you've made a commitment that, yes, I'm putting this forecast process in place, yes, I want a repeatable process, I know I'm going to be using this I'm not just experimenting with this forecast process, I know this is what I'm going to do, then chances are forecasting software is going to be for you. But if you want to just kind of get up and running quickly, and there's nothing wrong with that at all, you want to get in there, you want to touch and feel it, you want to find out if this really is such a powerful tool like I talk about, then a spreadsheet can be a good way to do that. And then you just put a limited amount of data in it, maybe 6 months of actuals like we were just talking about, 3 to 6 months of forecast, but you can learn a whole lot by just pulling up a spreadsheet and getting started. But I wanted to make sure I talked a little bit about those before we go into our example. Then we'll revisit this again as we get to the end of the next module.